Good morning, everybody. Thank you for joining us here for the second session of our sort of Liaising with Legals webinar. It's a great opportunity to have, a panel, if you like, of specialist legal, specialist legal providers on the platform with us today. So we've got a representation from the lender side of things. So we've got Dave Burns, Enact Conveyancing. He's here and he's going to be giving us some insights from the lender side of things. So really what I want to achieve here with that addition to the panel is we want a balanced and broad view and an understanding of all the different sort of stakeholders' positions within the transaction that is equity release, because it's important to understand that when you are assessing the needs and wants of different people in this process. We've got Peter Barton from Barton Law, we've got Matt Taylor from Equilaw, and then we've got Adam Carnall from Forever Legal as well. The session objectives, as I just said, we want to liaise with legals. We want to make sure that we are being thoughtful in terms of the process of equity release. We are getting any sort of action points delivered and assessed prior to case submission. We're keeping that communication open and professional throughout the case. And then we fully understand the needs, as I said, of all stakeholders within the sort of transaction that is equity release. My name is Daniel Edmondson. I am the National Account Manager here at AdviceWise. This session is being recorded. So if you have to jump off early, end up on a call, or if you want to revert back to it in the future, you can do so on the upskill section of the AdviceWise platform. You just need to log in and you can request your CPD certificates as well. You will receive an email follow-up automatically from this session that will signpost the recording. There will also be a link there so that you can request individually your CPD certificates. I sometimes get emails from advisors asking if they can have their CPD certificates. So if you can check your junk box as well, sometimes some of these marketing communications go in that way. Everybody as standard has been muted and cameras automatically turned off apart from the speakers here, but we will have plenty of time, and I encourage you to shout up with any questions or queries and engage with the speakers, because that's really where the value is. So we've lined up a few sort of pressure points, a few discussion topics to go through, but I think the real value is getting you an opportunity to ask firsthand. Just as a sort of a PC matter, if we can, not give the guys a super hard time. If you've got particular cases you want to discuss, if we can keep that offline and just keep it general as possible. We don't want to be throwing anyone under the bus in this sort of environment. We want it to be as much value add as possible, because that's what we want to do, is educate. Just as a quick run through of everybody on the call in terms of an opportunity for them to update and introduce themselves formally, and please, speakers, do introduce any sort of new features or any sort of projects that you're working on at the moment. This is your opportunity to have a minute or two in front of all of the delegates. So Dave, if I could start with yourself, if I can, please. Introduction and then just a bit of a value add, if I can, mate.
Yeah, thanks, Daniel. Good morning, everyone. So I'm David Burns. I'm the operations manager for the equity release teams at Enact Conveyancing. Enact have been in the equity release sector for 18 years now. We have grown our proposition in that area pretty much year on year ever since then. It still remains an exciting growth area for us. So we're keen to move with the other stakeholders in the market to make sure the process can be as smooth as possible and get those positive outcomes for customers. Currently, over 50% of new lifetime customers come through Enact in some way or another. So there's an awful lot of transactions that we have involvement with. Our process is very much designed to be as light touch as possible to facilitate that end result, whilst making sure that we have protected our lender clients as much as we possibly can. It's vital to that we work in conjunction with the legal advisors, the financial advisors, and have joined up thinking. So really pleased to be invited on today. So thank you.
Amazing. Thank you, Dave. Really, really great to have you on the call today. And as we all know, Enact represent quite a significant amount of the lenders within our space as well. So it's really good to have that almost a yin and yang approach to the legals and wants and needs as the transaction progresses. Adam, you're next on my screen. If I can ask you for an introduction, please.
Hi, thanks, Dan. So I'm Adam Carnall, Director of Partnerships at Forever Legal. I've been in the later life space on lender, broker, and now legals for about 20 years-ish. Forever Legal, I guess we are one of the new kids on the block, although we're about 4 years old now. Specialist in equity release, alongside obviously what Peter and Matthew do. We're here today to really sort of promote the use of specialists, because I'm sure Dave from Enact will say it. I think about 50% of the market is still transacted through non-specialists, which does cause issues not only for clients but also for lender solicitors, because it is deemed to be a specialist lending product. So I think it's important that you work with a specialist solicitor. Not just Forever Legal, obviously Barton and Equilaw, we all do great things in this space, and we're all there to help clients complete funds as quickly as get funds done as on the books as quickly as possible, making sure it's done in a compliant and safe way, protecting the client's interests and also protecting the advisor interests. In terms of USP, a quick USP for Forever Legal is we have Forever Legal solicitors all over the country who go and visit the clients in their homes. And in terms of what we do in the meeting, we record all those meetings via audio and or video with client consent. And again, that's just giving the client peace of mind that everything's covered. Obviously, we're checking for things like vulnerability, any potential coercion, and again, but also protecting the advisors, because again, having been in the space for a long time, problems or complaints occur usually post-event. It's usually family or beneficiaries saying, my mum and dad didn't understand what they're doing, etc., etc. So we've taken this decision to add that layer of protection, again, protecting the clients, but also protecting the advisors, particularly as we're looking at, as we're moving into consumer duty and things like adding value to the process is something we think we do. Okay.
Amazing. Thanks, Adam. Great introduction. Thank you very much. Peter.
Thanks, Daniel. Peter Barton, currently of Barton, I say currently, of Barton Law, formerly of a different, thanks, Matt, formerly of a different company that I won't mention, a bit like Voldemort. I've been in the sector for about 400 years, it feels like. So yes, so been in it for a long time. And I think very much like Adam has said, you know, we offer a full national service apart from Scotland and Northern Ireland. And I think yeah, our current mission really is to really promote specialist solicitors such as Equilaw and Forever Legal, and obviously ourselves. And you know, that's obviously the purpose of today as much as anything, just because it really helps with a smooth client journey and helps promote the sector. Currently a member of the Equity Release Council on the Standards Committee, which has been very eye-opening, and I've always been very much sat on the fence with the Equity Release Council in the past, but I do really see the values of it at the moment. Looking at new products coming forward, it's quite exciting times for the sector, and I do appreciate, as we all do on the legal sector, how challenging it is for the advisors, and I think we're all very keen to work as closely as possible with you all to make sure that, you know, any trickier cases do go through, and to maintain client expectations.
Great, thank you very much, Peter. And last but not least, Matt Taylor.
Cheers, Dan. Morning, everyone. Matt Taylor, Business Development Director at Equilaw. We've been in and around the legal space for quite a while as well, so back to the mid-2000s. Not really a lot we haven't seen on that basis in terms of fiddly cases and weird scenarios. I guess from an output from today, hopefully we can cover some ground around the benefits of using a specialist solicitor. As Adam said, there's still loads that go off to high street firms and other local solicitors. So hopefully we can talk through some benefits of using us or our firms. Really, from a client journey point of view, you know, that's going to be hopefully a lot better, smoother and easier, probably a bit more cost effective as well once we get on to those points, and ultimately, you know, get that case completed and over the line as promptly and smooth as possible. As a firm, we cover all of England and Wales as well, just not Northern Ireland and Scotland, and loads of stuff coming down the track, which we'll be talking about sort of directly to brokers around our client portal and some of the AI-driven stuff. So yeah, lots on the horizon.
Amazing, thank you, Matt. And then just a quick, very brief update from my perspective. Obviously, you know, represent AdviceWise. You're all joining the AdviceWise webinar. Hopefully, we're all registered with us. If anybody has joined this webinar through some of the social campaigns that we've been doing, feel free to register. It's completely free. We're doing lots and lots of work when it comes to keeping up to speed with regulatory requirements, enhancing some of the features, tools, resources, namely the fact find and suitability. We kind of relaunched that on Monday this week in light of some of the recent press releases and requirements from our regulator. So when it comes to assessing income and affordability, vulnerability, and various other considerations when you're making recommendations, please do check them out. And probably to caveat that, as say, if you have any feedback from an advisor standpoint, so, you know, granted, the majority of us at AdviceWise are qualified, but some of us haven't advised a day in our lives, which I want to say that fairly, that we need to get feedback from advisors to improve and enhance the system continually, because this is a market that is quite dynamic. And dynamic, I would keep your eyes open for about midday today to see the output of the Monetary Policy Committee meeting to see if there's any changes in base rate. We will see. The prediction that it's going to go up ever so slightly. It's certainly not going to come down with the slight reduction in inflation we saw earlier this week. But it's good to keep tabs as an advisor as to what's happening from a fiscal perspective, because it gives you some insight as to, you know, maybe how comfortable the lenders are, what's been reintroduced or not reintroduced to market, and if there's any changes on the interest rates. So I know, strictly speaking, rates aren't solely dictated by our gilt rates in the market, but they're a good indicator to whether the market is reducing or increasing. So as of this week, the gilt rate stood at 4.530. It's seen highs of pushing 5% in the last quarter. So we've kind of fluctuated for the last couple of months really in this high environment. We know where the base rate sits. We know where inflation sits at the moment. I have had a few notifications this week about lenders reintroducing products and product iterations to the market. So, you know, I don't like to say the phrase green shoots. As a BDM in my previous role at Pure Retirement last year, towards the end of the year, that was the kind of the party message, you know, we'll get this year over with and we'll see green shoots in the new year throughout spring. I do expect to see more of the same. It's an extremely challenging market, but having a look at some of the Google search terms, we are still in a very good place. There's north of 21,000 searches done monthly that link into equity release, the various what, why and how questions in and around that. And if you're interested to find that information out, just Google answer the public and type in any search term. It gives you loads of stats in and around what's requested. But this isn't a SEO webinar. This isn't how to, you know, write blog articles on equity release or anything like that. This is liaising with legals. So as again, we want to really instill best practice here. We want to share what you can be doing pre, during and post equity release to help your clients get the best possible outcomes. I have got a list of sort of topics. We want to do a little bit more of a quick fire if we can. On the last one, we went a really big deep dive into certain topics. But just before I go on to our list that we have in the background of areas that we'd like to put across, does anybody on the call have any sort of questions, queries, any recent cases that you might have from a legal perspective that you could get a quick answer? Because not often do you get the luxury of having all the specialists on a call here. Now, just whilst you're having a think or unmuting yourself, the unmute button's at the bottom left of your screen. There's also a chat box. So if you're on mobile traveling, you can also put it into the chat box there. So I'll just give you a second and I'll keep an eye on that. But feel free to unmute yourself if you want to ask a question, anyone. If not, we will jump straight on to the first topic of the session that we've got in the background. So the first one I've got is actually, if you were on the webinar yesterday with Pure, I'll apologize. So we'll glance over this quickly, but deeds lost and where properties have not been registered. So if I could just do around the room quick as to a very high level overview and a requirement for an advisor when they come across cases where the deeds have been lost and the property has not been registered. So who should we jump and bully first? So Matt, you were an expert on this yesterday. I hear that stat coming. You've got a stat lined up. I know you have.
Self-proclaimed expert on reconstituting title deeds. Yeah, luckily it's not a situation you're probably going to come across too often. You know, most properties and bits of land are registered now. I think we're down to sort of sub 3%. So the chances of finding an unregistered property where the client doesn't actually have the deeds is going to be few and far between, but you probably will stumble across one or two, you know, during your advising career. I think the first point to make is to really drill down with the client as to whether they are actually lost or just misplaced. You know, are they in deed storage? Are they still with a lender maybe that's held on to them for a little while, or have they found a nice place to hide them in the garden, which we've seen before, and they can't quite remember exactly where they buried them. So that's probably the first port of call. If they are lost, then we'd need to go down the reconstitution route. You're probably looking at somewhere between 3 to 6 months to get that done. You might well need some specialist input from a firm who deals with that kind of work on a regular basis, up to £1,000 worth of additional cost, and ultimately no guarantee that Land Registry are going to actually accept the reconstitution and grant title absolute. So hopefully you won't see too many of them, but at a high level, drill down to make sure they're just not misplaced. And if they are lost, get in touch with one of the specialist firms to guide you through sort of exactly what the steps are to get to a good result.
We joked about this yesterday, and there were instances we've found where they've been found under floorboards or even buried in the garden, the deed. So it's all about sort of supporting that application of going through first registration, which, as you know, time consuming and also quite costly. But just for any of the other speakers, any sort of addition to that, any worthy points to put across?
I think I would just expand on Matt's final point, just with regards to the reconstitution process. It's very difficult, if not impossible, for the lawyer dealing with that to know 100% what class of title they're going to be able to achieve when they eventually get things to the Land Registry. So the expectations of the customer need to be managed, that if it's going to be a lower class of title, qualified or otherwise, that may be difficult to place with a lender. So it's just something that will need to go through non-standard channels and conversations to actually try to find a solution in those circumstances.
Amazing. Thank you, Dave.
Can I just add as well, Daniel? I think, you know, today I support everything that Matthew said. Well, as part of the process, really, the more evidence you can give, the better. And the problem is people's, I'm not saying memories, but it is almost kind of, you know, they almost need to know the date they moved in, who they bought it from. It's kind of, if they've got any copy documents, often they don't, because if they're throwing away the original deeds, or the bank's, the bank is saying they've never had the deeds, but they thought the bank was, very rarely have copy deeds. But anything that they can find, any, you know, old documents, it all kind of adds to that kind of, you're trying to, you know, recreate or rebuild the history of the property. So the more they've got, the more chance you have of getting, as David would say, that the better title. But it is very difficult, and it is that, you know, proof that they've been living there all that length of time. And, you know, what the Land Registry will struggle with is, are there any restrictions that should be on the deeds, or any benefits that should be on the deeds? So the danger is you end up with a possessory title only for a number of years. But, you know, we often do find when we see it quite a bit, actually, especially down here in the southwest, where they can't find the deeds. But usually when you say to the client, so it's going to cost the best part of £1,000 and take 6 months plus, they do often then search properly, and it is clients often know what they're looking for. So sometimes when you say it's 2 or 3 inches thick of documents potentially, and it will smell quite musty, that usually helps. And certainly, you know, if the deeds happen with the bank, when you say to them, look, we'll charge you £1,500, they do often then send somebody around to look through the deed section, because they've often been misplaced, and they'll then find them. But it is an arduous process.
Absolutely, but one certainly needs to be picked up sooner rather than later if you do come across any clients. But as Matt rightly said, it's probably sub 3% of properties that are non-registered, so few and far between. We have got one in the chat box here from Henry Armstrong. Henry, thank you for your question. So Henry's got a case where one of the married individuals in a couple has lost capacity. So unfortunately, they have dementia. There is no LPA in place. Therefore, as far as Henry understands it, the client will need to apply for a deputyship. Is there any way around this from a legal point of view to put ER in place?
It's probably the simple answer, Daniel. And obviously it can't be the other spouse that applies to be the deputy. It would have to be, you know, because you can't have the same person signing for themselves and for the incapacitated. Unfortunately, if they've lost capacity and if they're both named on the deeds, it's going to have to be deputyship, and it'll actually be 2 applications that we're making, or the family or somebody will be making on their behalf. One, to be appointed that person's deputy. The second application will be to proceed with the equity release scheme. And that's what, certainly Matthew and Adam and myself also feel very sorry for the advisors on the call, is that actually, because the application can take 6 to 12 months, when you're putting the application in to proceed with the lifetime mortgage, you as advisors are having to say 6 months, well, as in today, saying, we're recommending this product, for example, with Pure at this rate, and you'll have to go to the degree of producing a recommendation of a named lender, a named sum and a named reserve that has to be specified on that separate deputyship order. And of course, by the time that order is eventually granted in 6-9 months' time, it may be a different amount they need, or that product might not be available. But it's one of those things that the OPG recommend. They can apply to have it expedited, which should take a couple of months off the application. But unfortunately, there's no way around it, I'm afraid.
Yeah, and I guess the consideration from a lender standpoint there is they need to make sure they're lending responsibly, and it wouldn't be responsible to lend to somebody that's vulnerable or has characteristics of vulnerability, and can't make that decision for themselves. So it's for the right reason. So Henry, I hope that answers your.
And unfortunately, the cost, Daniel, is quite painful. It's several £1,000s for the application, probably another £400 for the separate equity release application, and then with deputyship, it's ongoing. You have to actually pay ongoing fees and an ongoing insurance premium as a deputy. So it's one of those things that, it's very easy to make a lasting power of attorney, even easier not to make one. But it's only now that we all see the consequences of it.
Yeah, and I guess that's sort of food for thought for when you're dealing with your clients and engaging with new clients, not necessarily if they're in this scenario, but if they don't have these sort of protections in place and you're setting up an arrangement where they have a drawdown facility, it's really important to be having these conversations and outlining to the client the pros and cons of not doing so and what potential issues it can cause in the future, because there's a reason that this has come across, and hopefully that would have been caught 5-10 years ago when they last did a remortgage or engaged with an advisor. But great question, Henry. I hope that answers your point just there.
And Daniel, can I just add on to that? Sorry to take up the time, but it's one of those things I was saying, and Adam was there when I was saying it. It's one of those things that I do, certainly when there's a drawdown feature of the borrowers, I do always worry that the FCA with their rose-tinted hindsight glasses on will say that to you all as advisors, well, actually you recommended a drawdown product to Doris and Jeff. Why didn't you recommend LPAs at the same time, knowing that if Jeff is incapacitated in the future when they come to get the drawdown, how do they get hold of it? And they have to then go down the OPG route. You can almost see in the future, at some point in the future, even though it's a legal document, the LPA, that there could be some criticism on advisors. So it's one of those things that for the advisors on the call to watch out for, because even though they may make it mandatory that you mention these things later on, they will always come back with the benefits of hindsight and say you should have done this. You will know how to pay the OPG costs for the customers. And for those of you on the call that actually make your own LPAs for the customers, as lawyers on the call, we always say it's quite easy money making LPAs, and unlike with wills, it's far less likelihood of litigation in the future if you do them correctly.
Yeah. Awesome. Thank you very much. And I'm sure there's lots of support and you can engage with people offline. I'm sure all of the speakers on the call will welcome a call if you wanted to sort of pick into that detail a little bit more offline. Okay.
Daniel, I've got a question. It's Chris Brooks here, if that's okay.
Hi, Chris. Hope you're well. Yes, thank you. Go for it.
Hi. So I have emailed Peter about this previously, but it'd be good maybe just have a bit more of a chat. So in the last, I think, AdviceWise newsletter, there was an article about tenants in common, where he wrote in there about following first death of the survivor, they wouldn't be the sole owner, so couldn't port the mortgage. So obviously, if we're talking with clients and they own the property as tenants in common and they have an idea of downsizing in the future, that's not going to be possible if the properties or if there's a will trust that exists once the first borrower passes away. So my question is there any way to get around it if, for example, the will trust is the kids of, say, the dad who's passed away? Is it an absolute the clients cannot downsize or move? And is there any, kind of wriggle room, for example, around that? And is there anything else that you would say to bear in mind so far as tenants in commons are concerned, and downsizing or moving later?
Do you want me to take this one, Daniel?
Yeah, a few moving part there, isn't there?
Yeah, Chris, I think first of all, the easy way to avoid the problem, which is probably the lazy way of avoiding the problem in my mind, is just take it out of the wills. So they could leave themselves as tenants in common, but change the will so that it all passes to each other. Of course, as we all know, as specialists, often people spend a lot of money putting these will trusts into place. Now, I do know there are certain lenders that will, not many of them. I'm thinking of one principally that will allow the tenants in common, first one's died, will trust in place, will allow porting, but there's only one. Of course, that might not be necessary. That lender may not offer the best rate. What we tend to say to customers here is, if you have got a reserve pot or you want to port, maybe keep the will trust out of the wills until you're 100% certain that you never want to remortgage, you never want to move again. You won't need to go back to this. You're in your final home, and then once you've got to that stage, you then put the will trust in place. But it tends to be, the majority of lenders do not like will trusts because there is somebody else ultimately owning the property. So the best way around it is to take it even temporarily out of the wills until they've exhausted the drawdown, exhausted their moving potentials and remortgage potentials. But I will defer to Matt and Adam on that.
Anything else to add, chaps? Is there any other notes on that? No,
nothing from me.
Thanks, Peter.
Out of curiosity, Dave, does any of these sorts of difficulties and intricacies fall into your remit? So, I appreciate that the responsibility is on the client's representation, but are there ever instances where maybe a non-specialist legal provider is kind of leaning on or pushing things over to Enact or the lender's side of things?
It tends to be that, well, there's two different scenarios here. We have a will trust that's in place before a customer is looking at an extra release product, and then the option's open to a customer when they already have a lifetime mortgage. And it wouldn't be for me to go into the options and advice a customer might need at those different stages. What we tend to see is that if a customer has gone down a non-specialist route, and that could actually be the financial advice and the legal advice, they're much more likely to not reach completion when an issue around trusts or wills or anything like that comes up, because they've not been advised in advance before making certain decisions. And those decisions that are made are then reducing their options down the line. So specialists and non-specialists, they can both resolve these situations, but it tends to be that that route map of when the early advice has been given to make the right decisions for what their future plans might be.
Amazing. Brilliant, thank you. And Chris, thank you for that question. Hopefully that got you a little bit more clarity and some value into that as well. Just moving on to the next one on the agenda, and again, as a reminder, please pop some in the chat or speak up and unmute yourself if you have any questions. But we'll move on to the next one, guys, which is we are seeing lots and lots more shortfalls, as I'm sure I'm going to get some nods on the call here as well. We still have that cost of living issue with clients. We have a lot of pressure under clients working longer and sort of deferring some of these options. So when it comes to shortfalls, and I guess an acceptance, and Adam, you mentioned it before the call, before everyone joined, the acceptance of you guys doing AML checks on clients. So just a little bit of detail from you on that. How often, how common is this now to see a shortfall, and what is, I guess, the formal process and expectation from an advisor to work alongside you?
Okay. Yeah, I mean, shortfalls do occur. Sometimes they're more frequent than others. Sometimes shortfalls are known about, sometimes they're not known about, because it might have been the client said, oh yeah, I've got X amount left on my mortgage, but when the redemption statement comes through, it's actually Y. So they might need to find a bit more money there. The issue with shortfalls is that ultimately, so we as the client's solicitor, and to satisfy our own money laundering, so we fall under anti-money laundering the same, even though we're not FCA authorized, we're SRA. It's the same principle, just the way same an advisor would. and your compliance teams to satisfy money laundering. So say if there was a large shortfall, we'll all have different limits, but generally speaking, shortfalls over a couple of grand, 3 grand, we'll have to verify the source of that. And sometimes, and it's more about positioning that with the client, where there's a shortfall that's going to be funded via the client, by their own funds, or however they're going to fund it. We need to verify where that funds have come from. So it might be, okay, yeah, there's a bank statement that shows 50, stream example, 50,000 is on the bank statement. They say, right, yeah, it's coming from my savings, or it's coming from this account. Okay, well, how's that? And we might ask a question, okay, how's that been accumulated? Or it's savings over time. Or it might be, oh, it was a gift from a family who's put it into my bank account ready for completion. But we have to also see the bank account where it's come from, because we have to see the chain of money. And it's not because we're being awkward or because we're being nosy. It's because ultimately we have to sign the declaration undertakings that we're happy for this to complete. So when we send a case over to Dave at Enact, Forever Legal, Barton Law, Equilaw, we're all saying, yes, we're happy. We're confident that the client understands what they're doing. This is the shortfall. This is the source of funds. It's not come via any other unscrupulous activities. We're ready to go and we can complete. If we didn't go through that process and it turns out that that money came from proceeds of crime, again, extreme example, or something else, the door that Pure, Aviva, LNG will come knocking on is ours, and saying, well, you said these these funds were verified, so therefore, we have to make sure that we go through the correct process. And we get it's frustrating for clients. Clients will get frustrated. Oh, why do I have to show you this? Or I've got to go through numerous bank statements, etc., etc. So for advisors where there's a known shortfall, or even if there's a shortfall that comes up and the client might call the advisor and say, oh, the legal firm's asking about this, it's very important that we have to go through that ultimately, because our overall aim is to get everyone to completion. No specialist on this call or in the market wants a case sat on the desk for a week, not moving anywhere, because as I say to everyone, everything is done on completion. If a case doesn't complete because we can't evidence a shortfall or we can't meet a shortfall, we don't get paid. We've put many hours into that work to get it completed. No completion, no fee. We all work on that basis. Advisors are the same. Everything gets done on completion. So it's nobody's interest to make things awkward or hold things up. We just want to verify things, make sure that we're happy with it, because ultimately, the book ends with us, and get that over and get it completed. So the clients get the funds, we get the fee, client and advisors get the fee. So that is, probably long-winded way of saying what the process is, but that's ultimately what we have to do.
Just to add some additional weight to that, looking at our data from August completions, 71% of the files where we weren't able to set a completion date within 48 hours of signing off the requirements were shortfalls. It's by far and away the biggest delay factor. Certainly this year, was less so in previous years, but the biggest delay factor at that kind of business end of the process.
Wow. Okay, that's I wasn't expecting that stat. That's
yeah. And sorry, just to add, and also because sometimes clients have forgot charges on the property they've forgotten about. So if you're doing a fact find with a client, you might just be redeeming a mortgage. And as the specialists know, we do a title check, and then, oh, actually, there's another charge in here. Or I didn't know. Sometimes there's historical charges on there that have been paid off that obviously we need to get removed anyway. But some have been lingering on there. They don't know about it. It might be, I don't know, a couple of thousand, but again, that needs to be repaid, because obviously the title needs to be clean for the lender to apply the charge. So that's when I'm going back to known shortfalls and unknown shortfalls. But the worst thing is getting 3 days before completion and a shortfall appears and everybody's running around with their hair on fire. We can get it resolved, but we need to work with the clients to do it ultimately.
Yeah. Okay. Very interesting. And thanks for the value there. Just as a sort of a side extension question to that as well, you mentioned, there's items on the title that, maybe haven't been spotted until the application's in and it's progressing through legals. They're not factored into that recommendation when it comes to allocating enough funds for those objectives. Is there a way and a means for advisors to pull a title? I know there is, but pretend we're completely blank to the finance industry. Can advisors pull a title, and how can they do that?
They absolutely can. The title register is public record. It's available to anybody who wants to have a look. Myself and the other guys speaking today will all be using the business gateway, but any individual can go on via the government website to pull a title. You can find it by Googling. It's very easy. The one warning that I would put in place is go through the .gov route. There are plenty of websites and companies out there that will sell you a copy of the title. They're making a margin on that, which you can avoid by going through the correct route.
And then, out of curiosity, how much would a title cost to pull? So if I wanted to go home and pull my own title, how much would I be paying on the Gov?
£3.
£3. Okay. So hopefully everybody knew that already, but for the benefit of anybody on the call that didn't, it is a possibility. And we're not saying that you pull the title for every client you engage with. Obviously, if you're buying leads in, or if you're engaging with some clients that maybe can't proceed, it wouldn't be justifiable to be spending £3 on every single client, in addition to everything else you're spending, travel and time and so on. However, if you think there may be a particularly difficult case, if the client isn't too fully aware as to how the property's held, what restrictions are on there, how much is left on the mortgage and things like that, it might be an opportunity to do that. Is there anything else to add, chaps, on that title element?
Yeah, just quickly, if anyone does want a title run off and you don't have a gateway account, if you ask nicely, I'm sure sales Peter and Adam would happily run one off for you with a little bit of commentary around what's on there as well, particularly if it's other title entries, CCJs, charges and things that you're going to need to total up the borrowing amounts to get the recommendation right. So yeah, feel free to reach out pre-instruction. That's absolutely fine.
Yeah, and that kind of segues on to, all the guys on the call be more than welcome for you to engage with them pre-application. If you have any difficult cases, and they've all got teams of support and phone lines to be able to ask questions and see what's feasible and what's not, whether something's proceedable. So, I encourage you to be really ahead of the game when it comes to your cases and making sure you're getting that recommendation right the very first time. But just moving through, I'm just looking at the chat. I can't see any more questions in there as well, but has anybody else got any more? An opportunity for you to unmute and ask if anyone's got a case on their desk at the moment, struggling to place, and it has a legal aspect that we might need to check with the guys. If not, I will look through the list for the next one. So I just wanted to bring up the next one now, which is special conditions. So again, as an approach of somebody that doesn't have a clue what a special condition is, where a special condition comes from, who requests a special condition, probably want to start with Dave, I think, on this one, because from my impression working for one of the lenders, it would more often than not come from a lender. They have a special request to put on an offer, and it proceeds through in that sort of order. So yeah, from the top, if you can, Dave, that'd be awesome.
Absolutely. There's a bit of variation between different lenders, how frequently you will see conditions, and how many conditions you get on there. That doesn't mean that these lenders have wildly different criteria and wildly different things that they care about. It tends to be the process that they choose to follow, getting to offer at the soonest opportunity, or making that offer as clean as possible, so completion can be achieved easier after that point. The end-to-end tends to be fairly similar. It's just different approaches to it. Those conditions will come from valuer comments most of the time, if it's something they're going to have to add on in addition to their standard processing. That's the most common place that it comes from. They can be an area of contention, especially when we're dealing with non-specialist solicitor firms who are acting for the customers. These conditions are things that our client wants to know. So common sense would suggest we are the ones that should obtain the evidence, interpret that and provide it to the clients. Sometimes that can be the case, but in the practical scenarios of a separate representation transaction, we have no opportunity to speak to the customer. We have no opportunity to fact find or investigate in the same way ourselves. So the specialist firms are excellent and on the ball with this sort of thing. They know that they're going to have to do the digging and provide that to us for us to check over and sign off. It is an area which delays cases. It delays more non-specialist cases than specialist, as I've said. The most important thing, I think, is, as soon as that offer's out, have a look at them, draw your client's attention to them, and hopefully they will understand why it's on there, and start putting those steps in place as soon as possible to get them resolved. The ones that are going to take longest are specialist reports, things like that, which are going to need third-party involvement. So as long as their legal advisor suggests that is the right route to go, they can get on with doing that, as soon as it's a known requirement.
Is there a specific common condition that you see more often than not, or is it quite varied?
The ones that we're seeing, I suppose, more and more now relate to physical environmental risks. So flood would be a big one. Septic tanks and the regulations around that would be a big one. These are generally going to require a specific search or a specialist report. So again, it might be something that is frustrating for a customer, because they may have bought the property and even through an entire purchase process, it's not been raised. But they have to understand the nature of a lifetime product, that the lender needs a good level of assurance that the property they're taking on is not just good security now, it's good security in 10, 20 years. So that's the reason for the level of detail.
Yeah. And looking at from a lender's perspective, from my background, there was a lot of cases that I'd come across where we're trying to progress them onto completion, and we'd be waiting for things, special conditions to be met. And you'll probably get emails from underwriters and case handlers saying, we're waiting for special condition 4.2 or whatever it might be. They're there, and that you need to manage the client's expectations and open up and support that process. Yes, we value all the business that we get, but we can't just kind of sit back and hope everybody else will spot it and do the job. We need to, as advisors, we need to help support that process as much as possible and get involved. Some of the best advisors I've dealt with in the past are very much interested and want to get involved in cases and want to work with everybody, rather than kind of point the finger and make it challenging for all people around as well. So as Adam rightly said, no one gets paid until these cases complete. We all have that sort of mutual direction that we're working in as well. I also used to found it where advisors would be encouraging me to say, oh, look, just condition the ID, just condition X, Y, and Z. Does that cause issues? Obviously, the more conditions, the more work. We weren't really in the game of sort of chucking loads of conditions for the sake of it. We would much prefer to wait and get it before that ticking offer expires. is probably the biggest reason.
Yeah, ID is a big one, Daniel. It's an area where rework and additional work is almost guaranteed, because the advisor is verifying ID, the solicitors are verifying ID, and the lender's verifying ID. Nobody in this process can get away from that, because their regulations say that they have to. So everybody has to satisfy themselves. The sooner that can be done, the better. The expectation generally with mortgages is that ID would be satisfied before mortgage offer. I think there has been in recent years a move towards relying on the fact that they know this customer has legal representation, and potentially they could resolve this down the line. That can be done, but it's just an additional step to do in a period of offer validity, which we all know is limited. And when we can't guarantee what rates are going to be available in future months, adding risk into that kind of offer to completion stage is increasing the risk of disappointment for a customer. Lenders themselves will also have different interpretation of what is acceptable for ID and how they want that to be presented. Again, that is one of the benefits of using Forever, Equilaw, Barton, other specialists. They know about these quirks, they know what to provide, so that tends to smooth out that process.
Daniel, it's Chris again here. Can I just chip in on this? I had what I thought was a bit of a ridiculous situation a short while ago. Standard life case. Client had a middle name. She had every combination of document, but each of them had different variations of her name. So not a real name, but DR Brown, Diana Brown, whatever it was. And each of those, none of those satisfied the lender's criteria. So she was able to provide some documentation, but it didn't tick all of their requirements. What they would accept is me meeting the client face to face, which I did. I got on the road for an hour and a half to see her, to verify that I'd met her in her home. I was not required to see any ID. It's purely to say that I have met her in her home. And this was after she'd received a home consultation from a specialist solicitor. That just doesn't make sense to me. So why would a lender accept my saying I've met her without a requirement to see ID, yet she's had to provide ID for that face-to-face consultation?
I think as Dave rightly said, you know, the lenders have a different remit to what they accept, how they accept it presented. And whenever I came up instances with that as a lender, it was almost like the more information, the more reassurance, the better for their compliance team to kind of make a decision to say, yes, I am happy. We haven't been able to, you know, point blank get the driving license, the photo ID and the address verification. However, we've been able to get X, Y, and Z, lots of different things to support a decision to be made. And as long as they've got the audit trail of that decision, I can assume that's why that was probably one of their requirements. I don't know whether I see Peter's got his hand up, or I don't know whether Dave, you're unmuted. If there's any other instances why that would have been a particular face-to-face yet not been able to see the ID.
I think you've hit the nail on the head, Daniel. It sounds like for whatever reason, without having knowledge of this particular case, it's not one that I can bring to mind. It sounds like what they've done is they've tried to take a view on the situation. They've gone, the ID presented to us does not strictly meet our requirements for whatever reason, but what can we do to help this customer and enable the case to progress? What can we do to feel satisfied that we will make a decision that this can go through? And it sounds like your meeting, Chris, has been that additional reassurance that just helped them feel comfortable.
It wasn't a kind of negotiation point. It was on their standard, what they would accept in terms of ID. Like I say, for me, I would have thought, okay, I'm qualified advisor, etc., etc. You've also got someone who's, you know, covered by the SRA. I feel that the solicitor would have been in a much more or in a position that they would have took more comfort from. Yeah. And like I say, for me, just to go down and not see, there's no requirement for me to see her ID. I'd only spoken to this lady on the phone. I had spoken to her numerous times, so I knew I'd met the right person, as it were. But it just seemed a bit ridiculous.
In that scenario, I mean, we've had a few recently where, and we had one case where the lady got 9 different variations of a name, and she changed her name by default, and God knows what else. We asked the client, to satisfy ourselves, we did a statutory declaration from the client, and that was, and the lender said, as long as, well, if you're happy, get a stat dec from the client to say, yes, we're comfortable, they are who they say they are, and all the different variants. It's usually middle names, and, you know, people drop middle names and things like that, or they go by the middle name, not the first name, you know. And when we get an instruction through, we ask them what ID they've got. Is it valid? Is it in date? Does it match what's on the instruction? Does it match what's on your title? Because again, it's trying to preempt, because it's such a simple thing, ID, a bit like buildings insurance. Have you got it? Is it valid? Does it cover what the lender's going to want you to cover? So little things like that can delay things, you know, just stop completion. So yeah, but on that scenario, yeah, it feels a bit weird asking your advisor to go back out, especially when, you know, solicitors seeing them face to face. We would normally get asked the client to do a stat dec, satisfy ourselves, and then get it set.
Awesome. Thank you guys for the input on that one. So it might be, if that ever comes across again, let's hope it doesn't, Chris, you know, engage with a client's representation and see what might be feasible, as opposed to driving an hour and a half and seeing the client yet not their ID. You know, you could probably help support the lender in that respect. But Peter, you got your hand up.
Yeah, just a couple of points on this, and you know, I would certainly, we're all tired of seeing clients with a number of variants of their names and never quite know how they manage it. Many of these things that David's raised and Adam has mentioned, we can spot earlier on, even before it gets to offer. So it is, as Matthew said earlier, if we get a copy of the deeds for you before you even put the application in, you can see what the client's ID is saying. We can see what the deeds are saying, because obviously it needs to marry up. And I think we're dealing daily with queries on what name do we submit on the application. So we can start that process that much earlier, because as David said, the life of the offer is so short sometimes that actually we need to be moving forward. And again, with the septic tanks, you know, we all know as specialist solicitors that this is going to be an issue. Obviously, the high street solicitors won't really pick up on that, and this is where specialists are important, is if you know you're seeing a client or speaking with a client, one of your checklists as an advisor will be, do you have a septic tank? And then we can start that conversation with customers, or you can start the conversation with customers that actually you will probably need a specialist report. So again, we can preempt the offer running out, and not necessarily preempt the condition on the offer, but at least we can be a few weeks into that process, because specialist reports can take many weeks, if not several months sometimes. And again, the identification, I think all of us specialist solicitors on the call know which lenders will actually ask for extra ID, and particularly where you're dealing with somebody who may have a right to reside. We know that will generally always be asked for, or you know, an HBC certificate. So many of these things are identifiable even before the offer is issued. So that's where working with us guys makes it much easier for the customers and yourselves.
Amazing.
Dan, just to jump in on that one as well, just on discrepancy point of view, often comes through on the address side as well. So particularly if there's a house name floating about that's on an ID doc but not on the title, or vice versa. So again, with those kind of situations, really worthwhile looking at the title just to see what land registry understand the property to be called or named, as well as the address stuff, which the other guys have talked about, name stuff. Sorry.
Awesome. Thank you. Thank you very much. So just looking at the time, I'm very conscious of allowing us time to sort of close up and sort of reaffirm some of the key points, but there's time for one more question. So if anybody from the session live wants to put across a question, thank you, Henry, and thank you, Chris, for your engagement so far. By all means, if you have another, you're welcome. But if anybody else has a question live, please do shout up and ask the question. I'd like to give you guys a chance to ask and engage, because that's where the value is in these sessions. So just quick, as like a sort of a minute quick fire over, if we can. Very last question from my perspective to the speakers is just in terms of sort of headline prices, and just a very quick overview as to what can cause significant additional costs to the clients, because we appreciate, you know, specialist solicitors will have a headline fee ranging from £600 to £800 inclusive of VAT and standard disbursements. But are there any other additional things that kind of get added on more often than not that advisors can potentially manage expectations and help support that?
I think leasehold would be a general disbursement. So if it's a leasehold property, generally speaking, all of us, I think, having not checked all your fee sheets, there'd be a disbursement for a leasehold, and that would be, you know, that would be a fairly common occurrence. So yeah, leasehold would be the most day-to-day one that we'll probably see, to be honest. Is
it quite common for sort of lots of additional disbursements? Again, I don't want to put you on the spot.
It depends case by case. I think what we always do is, once, I say, because when we get the instruction in and we do the welcome call with the client, or however we do it, they get an idea for fees up front as well. And again, we can feed that back into advisors, because a lot of the time the fees are paid for by the release. So again, that's an important part, is getting familiar with disbursements, or maybe even pre-instruction, right? This is a case, this is what it's likely to look like. And again, any specialist will give you an indicative figure of what that quote's going to look like, so you can build that into your fact find, your recommendation, your loan amount. But yeah, generally speaking, leasehold would be the others, and then you get more complex stuff like matrimonials, solar panels. Solar panels would be another one if they're leased. Do they need a deed of variation? Trust, dealing with third parties, you know. But generally, leasehold and solar panels would be your two big ones, I would think, unless Peter and Matt say different.
Occupier waivers probably in there as well, particularly if they need ILA and the occupier themselves needs to go off and meet somebody to talk through that form. But yeah, as Adam said, leasehold, MAT transfers and special conditions probably are top of the pops for additional fees.
And also unregistered, Matthew's favourite subject. If it's unregistered property, then, you know, potentially the lenders will want that registered pre-completion. So that's the other one to watch out for as well.
Yeah, awesome. Brilliant. That was a nice, quick, succinct last question there. Again, a few minutes just for me to round up, and I'm sure you'll all join me in thanking the speakers on the call today. So David Burns from Enact Conveyancing, Matt Taylor from Equilaw, Peter Barton from Barton Law, and Adam Carnall from Forever Legal. Now, all of these guys have business development teams in some way, shape or form, a help desk. I encourage you to pick up the phone, engage with them, get familiar with those, fee sheets and common delays and common ways that you can liaise better with these legal providers. From the lender's perspective, I would encourage you to speak to all the BDMs. Naturally, I'm biased, but I think the BDMs and telephone BDMs are worth their weight in gold. Yeah, please do engage. Please do upskill to help support your clients for better outcomes. So we've discussed the benefit of using specialist solicitors here, and I think the benefits again worth their weight in gold to sort of the transaction and making sure that we get to completion and we all finish that for the client at the end of it. Really interesting to see the shortfalls were such a big factor from an Enact's perspective in terms of not being able to set completion and delays to completion. Interesting to see how many properties are registered and how few. Matt, you're sub 3% that still need registering in the UK, but they will come up, and sod's law, they'll come up on your next case. Someone on this call will be picking up the phone to Matt, I'm sure. But yeah, I hope you've found that useful. You will all be sent an email with the link to the webinar to watch retrospectively, a link to request your own CPD certificates. Please let me know how you get on with that. And then just an ask from my perspective, if you found this useful or if you have any feedback, please do come to me directly and let us know what you would like to see, how you would like to potentially see the next version of this webinar to make sure that we're adding value in the right way and we're meeting the requirements of you as an advisor. But yeah, massive thanks for everybody. Thank you to the delegates. Thank you to the speakers, and you are all free to leave.